Okay, guys, welcome to another episode of the New Money Mastermind. Today I've got on the show with me Mike B. Mike runs his YouTube channel. I've been watching him for a while and following some of his stuff, so I really knows his stuff, and really happy to have him on the show. So welcome to the show, Mike.
Hey, everybody. Thanks for having me on.
Cool.
Nice to be here.
So Mike, let's just jump in. I mean, I've been following your stuff for a while. I think you've got some really good insights on the market. So, from my perspective, I'm running this group for my members, basically to help educate them. So I know that's kind of what you're doing on your channel as well. So
Yep.
maybe you can just give us a quick sort of background. How did you get into cryptos? What was your aha moment? And then how has that kind of developed in the last few years to where you are now, kind of helping people get into the space?
Yeah. So a number of years ago, I found out about Bitcoin and I started reading about it. And the issues that I was specifically concerned about were government confiscation of funds, because there were a number of issues happening in Europe at the time that I knew retirement funds would be confiscated, or even if they weren't confiscated, the governments could confiscate them if they wanted to, which is concerning. Plus, after the financial crisis, it started to come out that when you actually deposit your money in banks, you don't
It's not
own
your
it.
money anymore.
Yeah. So when I saw that you're actually able to control your own funds, then I realized that this would be a big deal once financial problems start to come out, because people are obviously going to want to have control over their own money. And then as my career progressed, I started working. I work in IT, and I have a networking background. So I started off as an engineer, and I was supporting telecommunications in companies. And then I got into the financial industry, kind of as support and strategy for financial institutions from a technology perspective.
Mm-hmm.
And I was really shocked at how bad everything is in terms of their understanding of technology. And I started to realize that these new technologies are really going to seriously challenge the existing financial system. So that's about it.
Yeah, that's actually quite interesting. I think we have quite a similar background. I used to work in the telco space in IT, also in networking, and I used to work in the banks back in London in 2009. That's when I sort of had my wake-up moment. Before I really found out about cryptos, actually, I was like, wow, what's going on here? All the banks are collapsing. I was seeing the guys at Lehman's walk out with their boxes, next door, and I was like, okay, so something's changing here. And yeah, it took me, I guess, a few more years to really get into cryptos. So were you into cryptos from back then in 2000 sort of very early days, or when did you start to really get involved in the space?
The first time I got Bitcoin, I think, was 2012, something like that. I bought some Bitcoin, and it was, I don't even remember the price, but it was really cheap compared to today. And then for years, I didn't do anything with it. I just kind of stayed updated on the news of it. And then probably in 2015, I started getting back into it and buying a little bit more. Than in 2016, a lot more, and then this year even more. So
Yeah, it's really exploded this year. I think everyone's kind of paying attention now, because it's not just Bitcoin, it's all these other coins springing up. Obviously, had big moves in like Ethereum, Dash, Monero, some of the big altcoins this year. And now it's just a whole wave of capital coming into the space. So I think it's really changing the whole game. What do you think sort of triggered that or prompted that? Why do we have such an explosion this year when it was just Bitcoin for years before that?
Well, the fix in the Ethereum contracts and the fork itself helped a lot, in my opinion, bring a lot of stability and a lot of comfort to people. And there were a lot of learning experiences that came out of that. And so when people really saw that, they said, hey, that we can build a business model on top of this, and it can actually go somewhere. And the fact that the decentralized sort of way of investing in companies was traditionally only available to high net worth individuals via private equity funds. And so now, even if a lot of these companies fail, there's still the potential to create private deals between individuals, which is something that I see is the most beneficial part of that, because it allows you and I to create an agreement without having to have 10 million or 100 million of capital to throw into a project.
Yeah, I think that's really exciting. That's a way of doing business with cutting out the middleman, basically. Because if you want to list your stock on the stock exchange, on AIMS, for example, you've got to have a few hundred, you got to have millions of dollars. Basically, you can't. It's prohibitive for people like you and me who just want to do business.
Exactly.
So this sort of trend of decentralization away from the banks, away from these middlemen, that's what you think is really driving the growth at the moment.
Yeah, definitely. Plus, I think that there's people that just hear about the sheer percentage growth in something, whether it's valid or not, and they get excited by that. So it's a little bit of both. I think more people just are interested in flipping the ICOs. Is kind of I think that the flipping is a fad, basically. But the actual functionality and what the technology brings to the economy is a lot of, when people actually start getting into it and start understanding it, it's what keeps them in cryptocurrencies or crypto technology.
Okay, that's interesting. So yes, I mean, ICOs is definitely one of the strategies that I talk about with my group. Maybe you can talk a little bit about that, because I know that's something you've covered a lot. And I think in one of your recent videos, you said you were getting a bit tired of ICOs, that it's very time consuming. You think there's a lot of hype, a lot of scams going on. Once there's a lot of money involved, obviously that's the scammers and hackers come into the space. So how long have you been in the ICO game, and where do you see it kind of going from here?
I got in ICOs just this year, and the first one I got into was Veritaseum. But the thing that tires me most about it is the drama, because there's total uncertainty about these ICOs. You have no idea if any of these are actually going to be successful or not, and immediately people throw out the scam word, or you're somehow associated with this organization and you want to pump it or whatever. It's just not like that at all, and so it's very exhausting to have to deal with that. The research, it gets exhausting because most of the ideas out there haven't been heavily tested. So you'll have ideas where they're legally binding, or they're reliant upon some sort of business model that is slow, or something that assists government, which is slow, and technology is fast. So those aren't really compatible, because you're going to have the technology increasing faster than the regulation. And what you end up there is something that just simply doesn't work, because it's dependent upon the regulation that can't evolve as quickly as the technology. And so trying to explain that to people is a little bit exhausting, because people are excited about getting into the next big thing that they think is going to make them a lot of money. And 90% of the ICOs or more are something that I'm not really interested in. So
because of the regulation issue, you think they're going to hit that wall?
Yeah, it's not necessarily the consideration of if something is a security, but a lot of it has to do, like, there's a few real estate ICOs out there, and the legality of our government's actually going to accept the smart contracts as a form of a legally binding contract. That, it's another way of saying our government's going to allow people to accept Bitcoin as a currency. Yes, okay, but on the other side of that, there's contractual agreements. If people have a disagreement as to what the contractual agreement is, okay, we know what it says on the blockchain and we know what we agree to, but we know that people often come to disagreements even if there's contracts involved. So we have yet to see that actually take place in the legal system. And I think that's a major hurdle, especially when it comes to real estate or any other contractual agreement between business parties, right? So does that make sense?
Yeah, absolutely. I mean, I think real estate's a really interesting asset class because it's so open for disruption. The way you look at the way the banks act as middlemen, lending mortgages, taking a huge cut, and obviously, LIBOR rates, interest rates are totally suppressed. So I think the whole asset class is inflated. There's definitely going to be liquidity issues in the future, an opportunity for decentralizing that model. Where you have peer-to-peer transactions, but how those smart contracts are then recognized or regulated is totally unknown at this point. So that's a huge opportunity. There's huge risk and huge potential as well. Have you seen any real estate ICOs that you like specifically, or at the moment?
I got in on Proppy, on that in a pool with some guys I know. I didn't put up the 50K, but the thing that interested me was they focused on the international aspect of property, because that is probably the most complicated aspect when it comes to closing a deal. I happen to know an attorney who works in that business, and it takes many months to close a deal only because of the paperwork.
Yep.
So if they can streamline the process using the blockchain and automate a lot of that, it's going to do a lot, or bring a lot of benefit to those businesses.
Yeah.
So, yeah.
Yeah, that's really interesting. I've seen it properly. I haven't looked at it too closely. I think it's so early stage that you really don't know which one's going to take off. But I think it's a huge asset class. If you look, there's about $200 trillion in real estate securities, mortgage-backed securities. So it's just a massive market. Obviously, there's a huge bubble there. It's gonna blow at some point. But all that value is going to have to move onto the blockchain. So there's going to be massive growth in the blockchain space. That's what I'm seeing. In terms of ICOs, I focus more on finance-related ICOs because that's just kind of what I understand better. So if you're thinking about liquidity and the problems with liquidity in the fiat markets, I think that's a huge problem. That's why we're not having growth, because the whole euro-dollar market, basically, where US dollar is the reserve currency and used for lending all over the world, and that sets the liquidity for the rest of the world. That whole system seems to be really struggling. We haven't had any real organic growth since 2009. That's why all the central banks are stepping in, buying everything up, and obviously, suppressing interest rates. So that's sort of an edge that I see, where if you can provide liquidity in the fiat world and then use cryptos, that's going to be a massive opportunity, because there's so much demand for liquidity. Everyone needs that. So that's why I really like projects like Veritaseum, Populous. Is that something you're looking at from that angle, or how do you see that?
Yeah, definitely the liquidity side of things are very, very interesting and absolutely beneficial. It's to me, it's more important as to who exactly controls the liquidity, because it's not so much as to the amount of liquidity that I find interesting or important. It's who controls it, because when you get into financing a business, when you have major stakeholders who put up a lot of capital in various opportunities, then they end up controlling it and dominating it and being able to dictate the rules by which people conduct business. And I don't think it's supposed to work like that. And the fact that you or I or a group of people can bring liquidity to the market, I think, is a lot more important, because it levels the playing field and allows people to voluntarily take back a lot of their rights. And I think people don't understand how much finance actually plays in the role of human rights. And the fact that when you're talking about the movement of value through the economy, because of the domination of the banks and their policy on how they control the money supply, it's basically created a situation where people are ultra poor in a lot of countries. And so when we provide liquidity as individuals, you're going to see second and third world nations actually become or grow at faster rates than we would have thought, because the banking system really left those people behind. So yeah, and there's a lot of people out there that have great ideas and a lot of creativity out there that's undiscovered.
I guess it's the same way, like in Africa, for example, they skipped straight from landlines, went straight to mobile phones, and that, it led to a huge wave of growth. And we're going to see the same things where they don't have traditional bank accounts. They're going to move straight to cryptos because it's going to be a more efficient transfer of energy. Is that a space you're following in terms of, banking the unbanked and that kind of wave of growth, or?
Yeah. So I was interested in Humanic. I actually, at one time, I had some tokens, but I put them more into, I think, Veritaseum. But definitely Humanic is an interesting option, because of the fact that you actually don't have to have a bank branch. You actually don't have to have a lot of people sitting and doing a bunch of administrative work that's not really necessary, that can be automated. So definitely I see a lot of benefit in projects like that. Excuse me, I need to get some water.
Sure.
Okay, I'm good.
So yeah, so Humanic, that's actually a project I was looking at, and I used to have some tokens as well, and I also sold them because they didn't really, they were underperforming if I look at the rest of my portfolio. So I think
Yeah.
there's long-term potential there, but there's so many opportunities. I feel like there's also a cost if you have your capital tied up in cryptos that are maybe aren't moving. There's other projects you like better. How do you kind of assess that when you're looking at your portfolio? Because I think that a lot of people hold on to things, they get attached to a concept, but then if something else is better, they can't let go. Do you have any attachments to particular coins, or you just like trade whatever looks good, or how do you kind of move around?
Yeah, so I have a core set of tokens and coins that I have, and I try to add to those. And then anything else that I can get and trade up on is a bonus. So I'll give you an example. Like Veritasium is one of my cores.
Mm-hmm.
Litecoin is as well, and
Mm-hmm.
Ethereum. Those three are right now the core. Bitcoin, so much. It's something that I definitely believe has long-term aspects to it. It's going to be around, but I happen to think that Veritasium is going to grow a lot more than Bitcoin in 2018, maybe even 2019. And so I took all of my Bitcoin and put it into Veritasium. Now, I
Wow.
had also some status tokens as well, and I was arbitrage trading for those because you can go on to CoinMarketCap and you can go and check the spreads between the exchanges.
Mm-hmm.
And at one time, Status had the largest spread. It was for a period of time like 30 cents spread,
Hmm.
which was huge. And I was able to do that for a couple of days and almost double my status, and then have a bunch of extra Ethereum as well. So my trading strategies kind of uh, change depending on what I want to do or what I see. So I can increase my Ethereum if I want to or if I need to, and sometimes I will trade according to that. Like I know specific events are going to happen, and
Mm-hmm.
I will take my Ethereum out, knowing that with a high degree of certainty or probability that that event is going to increase a token's price, and I'm going to dump that token, but still keep my core holdings in that token
Mm-hmm. Mm-hmm.
and get back more Ethereum.
Yeah, so flipping in and out of those positions where you see an opportunity based around news and events and that kind of stuff, I think that's quite a good
Exactly.
strategy.
Yep.
So I like the idea of sort of core holdings where you think there's long-term potential. Veritasium is definitely one of those coins I hold as a long-term sort of core holding, and I recommend to my group. Maybe you want to give your insights into why you think Veritasium has such potential. Why did you stop your Bitcoin? I think a lot of people who get into the space very early, they come in with Bitcoin. They don't want to let go of Bitcoin because that's all they know, and they can't really look past it. But I think, yeah, you're right. There are some of the coins that are going to outperform from here because Bitcoin's already had thousands and thousands % gains. Some other coins are very new and disrupting huge industries. So maybe talk a little about that and how you kind of see that playing out.
Yeah, Veritasium is one of those where I definitely see it being larger than life, so to speak. It's going to be massive because of the demand that people are going to have upon it, where especially the larger organizations who need millions of dollars of liquidity to conduct a real estate project or something like that. And when people understand that they can actually rent out their token for economic benefit through what the software is called is a Veritasium rental engine, and I think it's coming out in early 2018. And
Mm-hmm.
so the early parts of that are going to allow people to get in on that and actually have more benefit to holding those tokens than just Bitcoin. So when people understand that this is not just about money, it's about actually the economic benefit of taking place or participating in business deals, then I think you're going to see the massive growth in that, especially because you have people who are forward thinkers and then they get in on these projects early on, and other people who are not so future minded, they see those when those events become successful and they want to get in on it too. And
Mm-hmm.
probably those individuals have a lot more money and are more established as well, and then you're going to see price growth that's going to explode. At least that's the way I see it, probably 2019 2020. something like that.
So you're in
Yeah.
that for the long haul. As far as cryptos go, 3 years is quite a long time frame.
Yeah.
So Reggie Middleton's a guy I follow. I think he's got a good track record in finance. He comes from that world. So when I'm looking at ICOs, I look for people that have sort of proven execution ability. You know, he's coming into this. He already has a team. He already has an office. He already has a track record. Some ICOs are just all fluff and white papers fantasy, and there's no product on the horizon, and people can't really, you know, that's nothing tangible there. So a lot of people get caught up in this hype and investing in these kind of ICOs. What's your sort of strategy for how you assess an ICO in terms of its potential and how immediate and real it is versus just fantasy and hype?
So I try to aim for people who actually have business experience, because these individuals, you know, you can find somebody who can develop something from the technical perspective, like a great Solidity developer or someone who understands cryptocurrencies very well, but those people actually don't necessarily have business sense. And doesn't mean that they have any bad intentions or anything. They just don't have any experience in the business world to deliver business promises. And so you need individuals who have a good amount of business experience. You need a plan that's well formulated. And a lot of people were criticizing Reggie for not having a white paper. And if you look at the way he talks about the business plan, and you can go and see how he's pitching his idea to other people, it is well thought out. And that's enough for me to say, okay, he knows what he's talking about. It's not just fluff. And then they actually have to go and deliver on their promises early on. And Reggie has really been doing a lot of work. And a lot of people will go and say, hey, look, you know, I don't like the website, or it doesn't look that good. Well, a lot of these websites aren't updated on a daily basis. And I think that is actually a benefit, because it's a sign that these people are probably actually doing real work.
Busy building real value. Yeah.
Yeah, exactly. And then does the actual use case, is that a valid use case of whatever they want to do? Is there real value there? There's a lot of social tokens, and I think some of those are kind of fun and actually pretty entertaining, but doesn't actually mean that there's a real use case there to actually provide benefit. So there's a number of tokens for tipping, but those are no different in terms of functionality than most other cryptocurrencies out there. So those are kind of the points that I use to assess.
And there's so many ICOs coming out. I know there's some people that we both follow in terms of like people like Cliff High, who kind of go through hundreds of white papers and obviously save us time to kind of filter out some of the good ones that we can then shortlist. Are there people like that, other people that you follow, or in terms of how do you filter out the noise? What's your process for that?
No, Cliff is pretty much the only guy I follow. I don't really listen to a lot of other people. I've been watching and reading Cliff's reports for years, like maybe 7 years. And I actually don't get in on every ICO that he has recommended, mostly for my convenience. So I use a Trezor wallet, and if Trezor doesn't support what ICO is recommended, then I just don't get into it because I don't have a need to. So it's a mix of what is convenient for me and what I find valuable.
Good, because you keep most of your funds on the Trezor, and that's like a token-aware wallet, is it? Is that only Ethereum-backed projects you will go for? Is that what you mean?
Yep. So both Ledger, Nano S, and Trezor support Ethereum-based tokens, like the ERC20 tokens.
Okay.
So I won't get in on anything that's not secured by that.
Wow, interesting. I think I've got mostly in the same type of tokens, like Veritaseum Populous. There's one I like called Wager, which is launched on Waves. So that's my first one outside of the Ethereum platform. And Waves is kind of interesting. Decentralized exchange, kind of similar, I guess, to Ether Delta in a way. But they've launched a few ICOs now as well, so they're just kind of getting some awareness. But I guess security is a big thing. Maybe we'll come to that in a minute, how, in terms of securing your funds. I know BTCE's got taken down last week. People are freaking out about Poloniex this week. So, I'm always telling my members, if you're not actively trading positions, you shouldn't have your stuff on centralized exchanges, because that's a huge third-party risk. And I think people who haven't been in the game a while don't realize that, because maybe they missed Mt. Gox. Maybe they just get complacent. So I guess that's something you talk about a lot as well in your videos, I know, to help people. In terms of just common sense, is there anything you think people should know? Or, basic two-factor authentication, keeping it in cold wallets. Your strategy seems like pretty conservative what you're doing.
Yeah. So what I would recommend is if the biggest thing I would say is if you don't intend on sending tokens, don't log into your wallet. So you know what your recipient address is.
Mm-hmm.
So you could go and find that on a block explorer and then bookmark that. And when you send it, you can just send a test transaction
Mm-hmm.
of a very small value and assure that that gets confirmed, and you can check that on the blockchain. And then when you know that that has worked, you can send a larger value. That's what I do, because even if you're very careful, you could make a mistake.
Mm-hmm.
And uh, doing it this way means that you minimize a lot of the possibility for a mistake to happen, because you're not actually logging into a wallet. I use the hardware wallets because they've been there have been hackathons to try to crack these, and
Mm-hmm.
they're open source, so they're pretty solid. And once you understand them, they're kind of stupid proof. And I just don't put any funds on an exchange. Two-factor authentication is okay, except there have been cases that somehow people have been able to get by the two-factor authentication, and
Hmm.
that information hasn't been published as to how they have done that, and I
You
would
think
like to
that's an
see that.
inside job, or you think that's just a bad security flaw?
Um, I don't think it's an inside job, but some people have found a way to. I'm not exactly sure how they did it, but
Hmm.
like with the Veritaseum thing, I would like to know how that was done. And we're not getting any details out. And I honestly don't think it's an inside job, but without the details being exposed or published, we really can't take any learning from that, or find out what the next step is to make sure that we're secured from that. And I've even had people log into my Bittrex account when two-factor authentication was in place.
Hmm.
So I didn't have any funds there or anything, because I don't actively trade on Bittrex.
Mm-hmm.
But I noticed that one login was from Russia. uh, yeah, and so actively changing your passwords regularly, it helps using a password manager. But ultimately, um, don't keep any money or tokens on the exchanges. That's a big one.
Yeah, yeah,
Yeah.
absolutely. I think I got complacent as well because I had a lot of stuff on Bittrex, and then I saw BTC got taken down. I was like, okay, and then Poloniex was down. I was like, okay. So you just don't know until it happens to you, and you don't want to wait for that to happen. It's not a pretty thing to happen if you
Yeah,
put a lot
exactly.
of energy and time into something and you just see it taken away like that. So I don't have any cold hardware wallets at the moment because most of my tokens are with my Ether wallet, and I feel that's pretty secure. Is
Yeah.
there a reason why you use Trezor or the Nano wallet specifically versus like a MyEther wallet solution?
Well, Trezor and Nano S integrate with my Ether wallet. So
Ah.
the yeah, so the Bitcoin, Litecoin, Dash, Zcash, they're they're all supported by the Trezor online wallet, which is something that the Trezor company has developed. But they also integrate with some of the software wallets that are out there, like Electrum.
Mm-hmm.
But you can, when you actually get a Trezor, and you want to integrate it with MyEther wallet, you create a new MyEther wallet account there,
Mm-hmm.
and you get a bunch of addresses along with that, and then you move your tokens over there. So it is one way to secure wallets in a cold storage type of way. If you don't have uh, the money, or not willing to put up the money for that, it's somewhere between $100 and $250, depending on the
Mm-hmm.
availability. You could use the paper wallets. I'm kind of against it because I'm paranoid, and and if a fire happens or water damage, a number of things, paper is
You'd really
not
kick
that.
yourself if that happened. Yeah, yeah.
Yeah, paper is not so durable. So
Okay. And do you have a preference between Trezor and the Nano wallet, or any differences?
well, I think they're pretty much the same. I just got into Trezor and I've stuck with it. So
Mm-hmm.
um, some people prefer Nano S. I think that's totally fine too.
Yeah, I think that's definitely worth looking into. I tell my members, if you have a few thousand, it's a no-brainer just to get one because it's peace of mind at the end of the day.
Yeah.
And otherwise, you're keeping on the exchanges, and then there's obviously risk there. But what's interesting is this proof of stake, which is coming out more recently, is evolution towards proof of stake and actually earning like interest on your coins. So I don't know if that's something you can do with a cold wallet so easily because that needs to be online and connected, in order to earn that interest. Are there any is that any part of your portfolio at the moment in terms of proof of stake and trying to earn interest with masternodes and things like that, or not so
Uh,
much at the moment?
Not really. I'm not real focused on that. And you actually hold the private keys anyway when you have the cold wallet, and it's totally online. So
Okay.
I think you would get the interest and the return anyway. It's just the fact that the Trezor itself holds the private keys.
Mm-hmm.
So uh, it's not like a total cold storage solution. It's where you have more control over the private keys and the access itself. But I really don't care too much about proof of stake. I think, yes, it is a better solution, but it's not something that I look to as a form of investment.
That's really interesting. I think that it's a newer thing for me. Just like ICOs, I think it's kind of emerging. No one really understands exactly how it's going to turn out, but I think there's a lot of potential because, look at Dash, for example. If you bought a Dash masternode last year, I watched this video where I think Amanda Johnson, the one of the Dash marketing girls, she was talking about you can buy a Dash masternode for $7,000, which means one Dash was $7, right? And then
Sure.
fast forward a year, Dash is now $200 a coin. So basically, for a 7,000 investment, 1 year ago, you'd be earning about 1,000 to 1,500 a month in interest based on the capital appreciation. So I think that kind of got me thinking, okay, wait, this is very interesting. This is a different kind of model with cryptos. Obviously, Dash has already had its kind of upside and its capital appreciation. So I think it will do well like Bitcoin and all those other ones. But the kind of junior altcoins, I think, haven't had that massive upside. So there's a fork of Dash called PivX. There's some smaller masternode coins. I think there's some real potential there. But that's not an area you've looked at the moment, you're saying.
Excuse me, I didn't hear the last part.
I was saying, but that's not an area you've really looked into in terms of trying to find the next Dash or something like that.
No. I try to stay with stuff that's more established, and the speculative positions are these ICOs basically. So yeah, I mean, proof of stake is a good option. I haven't really looked into the percentages because though I think it's pure speculation as to how exactly it's going to turn out. Specifically for Ethereum, there's not a lot of information out there as to how much, in terms of percentage, are you going to get back for holding a given amount of Ethereum.
So and that's interesting because you mentioned Ethereum is one of your core positions. So they're supposed to be
Yeah.
transitioning to proof of stake. Is that going to happen? Do you know sort of what the time frame or roadmap for that is?
Based on what I've seen is that it was supposed to take place earlier this year and then later this year. And from what I've seen, there were some delays about a year or so. So it could be implemented probably mid 2018. But from what I've seen, the timeline keeps getting pushed back due to other development concerns within the Ethereum project. So Ethereum is one of my core holdings only for the fact that I think it has a long-term potential, and a lot of these other systems that want to come out and challenge Ethereum really aren't going to give it real problems. So as far as what I see, the only things that can really compete with Ethereum in terms of the functionality and utility are Bitcoin and Litecoin if they implement the RSK. So have you heard about that?
I just saw your video on that. Actually, maybe you can educate the viewers. It's kind of a new concept to me as well. So this idea of
Yeah.
smart contracts, people say, that's why Ethereum has an edge over other coins. It's kind of the leading coin for that. But you're saying that's coming into other coins. And how's that going to work?
Yeah, so there's a development platform called RSK that can be integrated with other traditional cryptocurrencies, and Bitcoin has the Bitcoin development team has started to look into this actually put this on the test net and play with it a little bit. And what that will allow people to do is put smart contracts on Bitcoin and Litecoin. I think they're looking at that as well. So if they implement that and it's successful, then you're going to have some real challenges with Ethereum. They're all going to be fighting for the same space. And I think it's going to come out come between who is the fastest, most secure, and most convenient for the average user. But it's really interesting that now they're all coming out and fighting with each other, which I think is really the part where you're going to see some really exciting stuff come out as to how the tokens actually perform in competition.
Yeah, I think it's great if there is some competition because it obviously pushes people to innovate and and develop something more interesting, more useful. Yep. Is this RSK thing like an open protocol anyone can use on their chain, or is it something that's like proprietary, or where did that come from?
I haven't looked too much into the RSK as an open protocol or closed, but it's run by an organization called RSK. I can send you some more details after.
Very cool. Yeah, I wonder if there's a token or some way you can actually invest in that directly. That would be interesting.
No, I don't believe so. I don't believe it's tokenized.
Okay. And so, yeah, I think Ethereum obviously has a first mover advantage in this space in terms of smart contracts. There's tons of development happening on it. The way I see Ethereum is kind of like an infrastructure layer coin, with all this growth happening on top because people are programming into the blockchain, with tokens like Veritaseum, Populous. So there's a huge, huge wave of growth happening on top of Ethereum. And that's why I think it has long-term potential, long-term legs.
Right.
Obviously, there's volatility with that because, if you want to back an ICO, you need to buy Ethereum. So it creates this temporary demand. And then when the ICO companies sell their Ethereum, when they have, projects funded for dollars, then obviously you have tons of supply dumped on the market. So I think there's tons of volatility. And for people who are just investing for long term, if they don't really understand what they're investing into, they could probably get shaken out by that. So is there a way you kind of help people look at that in terms of, investing with confidence? Because obviously a lot of people are chasing the highs. When Ethereum's going to 300, 400, everyone's jumping on, all the new money is jumping in. Then it turns around and, we see like a 50, 60% correction, which I think is fine, is healthy in a bull market. But obviously Ethereum's even more volatile because of these capital flows. How do you see that, and how do you kind of help explain that to your members, your subscribers?
Well, it really comes down to how people feel, not how you could actually explain it to them logically.
Sure.
Most people, when they deal with money, no matter how much you explain to them, they don't try to think about it. And it's very difficult to separate emotions and money because you work all day for money. And so if people lost it, they're obviously going to be upset. Mm-hmm. I actually had a good friend of mine who had a position of Ethereum, got in on some ICO and it didn't pop immediately. Mm-hmm. So he sold it off. And then Ethereum started to go down a little bit and he sold off all of his Ethereum as well. And he only held it for a few months, and it was all during this ICO stuff. And I talked him through it, and I said, hey, look, this ICO madness has got to calm down one day. Mm-hmm. So just be patient. I have faith in this. You trust me, you know me. So try to have a little bit of faith. If you lost all of this, you're not going to have, a messed up life, or it's not going to impact your life in any negative way. But he still sold it off. And at the end of the day, I mean, it's someone's personal decision to do that. And I feel like I can't educate people on it because it's how they deal with their own emotions when it comes to money and finance.
Yeah, of course, it's really personal. I think there's a couple of principles or sort of models I try and tell my members is, first of all, don't use money you can't afford to lose, because ultimately that volatility is going to shake you out. If you see your portfolio swinging around and it's a huge amount of your total savings, you're going to freak out. You can't sleep at night, right? It's not worth losing your peace over. So I personally say you don't need to put more than 5-10% of your capital in this sort of market, because it's exponentially growing. You're going to have enough exposure, and that, with that amount of capital, you don't need to put like 50% of your money in or more, where you really are losing sleep over it. So that's the first thing, is obviously being careful with money management. I'm quite conservative with the rest of my investments. So for me, cryptos is the more speculative side, but also super exciting because it's super new and no one really knows where it's going to go. So that's the first thing. And the second thing is obviously jumping into something without first educating yourself is probably the biggest problem, because that's why people see cryptocurrencies as risky, for example, because they just haven't educated themselves on what it is. So it seems risky. And then obviously if they buy and they jump in without knowing what they're doing, I had friends coming to me and ask me, how do I buy Ethereum, when it was going for 300, 400, because they'd never heard of it before. And suddenly, it's like the biggest buzzword. So people are just jumping in without any real understanding. And obviously, cryptocurrencies, if you've been watching it, it's a super volatile space. You can have 50, 60% corrections in any coin. It's not even, an issue. So you should never be chasing the highs. You should always look for the retracements. If you're looking like at a coin like Ethereum, you like the long-term potential, there's always going to be a 40-50% correction. So that's kind of the second thing, is to have the patience to not just jump in on something on impulse and then get freaked out because you probably over leverage yourself and you didn't educate yourself, and you didn't time it. So I know you do a little bit of trading. Is that something, is that philosophy you use for yourself or for your people that you help? Or
for myself, I'm a little bit more risk oriented. I like high risk, and I like a balance of having something that's very solid. Like I have a big position in silver, and even though silver might move, down 5% in one day, that's not going to ruin my life. Even if I had to sell some of it off, if I lost everything in cryptocurrencies, it really wouldn't bother me. But I have a lot more cryptocurrencies than I have in silver, only because it's fun and exciting to me, and I like the risk, and maybe that's a little bit opposite towards what a lot of people feel and believe. But how I deal with this is I just don't care. They're an experiment to me, and it's my mental state. And when it comes to trading, I use the trading document that I used to have to try to buy the dips, and I didn't really want to sell off at the highs, because the volatility is such that even if you have a pretty accurate trading system, which that document was, you can still have a day where some fluke happens and you have a 20% drop, and it was totally unforeseen, and it can really shake out your position, and you can really lose when you thought that you were doing good, and then you would have to go and reassess, hey, is my system working? Am I developing a good strategy or whatever? So I just focus on buying the dips, and I think that is the best way for me to trade. Once in a while, like I said, if I see an opportunity, I will trade that, only for a need. So it's a logical decision. Like, do I need more Ethereum to get into an ICO? If yes, then I will go and look for trading opportunities. And if there are none that I find are relatively safe or relatively stupid proof, then I won't do them, because I'll probably lose money on that.
Yeah, I think that's not something everyone can do. So, I would like some more Ethereum today. Let me go out and find a trading opportunity. That takes a bit of time and discipline to know, see an opportunity and not just buy on impulse.
It does. And plus it takes discipline to not do it if you don't see some potential, because some days I think that there are people out there who are doing really well with trading and do it on a daily basis. It's just not something that I do on a daily basis. I think you really have to stay on top of it. If you want to day trade, you really have to know what you're doing, and it takes a lot of time to day trade.
Yeah. I mean, I used to do a bit of that in the fiat markets as well, and then in cryptocurrencies. And yeah, it's just super time consuming. Like, I don't like to spend all day on my laptop anyways. I prefer to be out in nature, spend as little time on the computer as possible these days. And obviously doing these kind of groups that I'm running takes a lot of time as well. So more and more of my time is going towards those. And then just, day trading is just too stressful and too time consuming. It's not fun. There's other ways of making money. I think ICOs is a really good way to play that speculative end of the space. So I prefer to focus on that. I did get your volume indicator on I think, which was that tradingview.com. You do a volume indicator for that, so I looked through that. I do use volume. It's kind of interesting. I think volume confirms price. It's one of the main things I learned in trading in the fiat world, and people don't really understand. They don't really apply those principles to the crypto markets, but I think there's huge potential there. If you come from the fiat world, you understand the kind of basic economics in trading. So the way I use volume, obviously, near the top of a sort of bull move, you will see that volume will start to dry up, because there's less and less participants in that move up, and that's a sign of exhaustion. So that can be a leading indicator that this bull move is going to have a correction in the near term. And then when you start to get a big correction, like we saw a couple of weeks ago, this whole market basically took a big plunge. You get a big capitulation move, and that's when everyone sells out, like your buddy and all the other people who didn't really understand what they were doing. They kind of get shaken out when the price is going down. and you'll see a big volume flush, and that will always correlate with the big, correction. That's usually a bottom. So I think when the market's corrected, like last week or the week before, I was looking at the volume. You can graph it, or you can look at coinmarketcap.com. They have sort of volume aggregates, which are quite useful. But the volume spiked like 7% of market cap. And normally it trades around 2-3% if you look at the averages. So when you see that kind of big spike in volume and a correction in price, to me, that's always a good sign of a bottom. And then if you're looking to buy in the dips, that's kind of how I use volume. Any kind of tips like that you want to share, or how you look for buying dips? And
yeah, the other thing is timing is key, because that's always going to be the hardest aspect of cryptocurrency. So if people have experience in the fiat world, what I noticed when I was working on this system is that cryptocurrencies, because they're traded 24/7, they move a lot faster. And in addition to the fact that there's not a lot of liquidity compared to the fiat markets, so they're more volatile, and the direction changes happen a lot quicker. So you're going to want to, whatever system that you have, that you may have developed for a fiat trading, you're going to want to look at changing the whatever indicators that you use for timing or volatility to be sensitive to that, maybe 2 to 5 times more, depending on what kind of volatility or what type of cryptocurrency you're looking at. And so it was really the timing that was difficult for me, because when I was working on that, you could see the MACD crosses actually happen after a major turn in the market, and that's not what you want.
It's supposed to be a leading indicator, yeah.
So it only happened because of the big volume, and so you modify the settings on the MACD crosses to the point where they cross at the right time, but then still they can cross at that specific day, because the MACD indicators themselves, when you set them up, you can set them up for a close or open price or whatever. But again, cryptocurrencies markets don't close.
Right. It's a little bit different. I think this stuff's a little bit more advanced for traders and stuff. Maybe we'll do another video on that in the future, but it is really interesting to me. And I know some of the people in my group do trade, so it's quite useful. I think Fibonacci levels to just look at retracements are quite useful, because when you're trying to buy the dips, typically you'll see 50-60% retracements. So that's quite normal and quite healthy, and that I feel safer buying. For example, I missed the Populous pre-ICO. So I was looking to get in, and it went on Ether Delta, and instantly it was like 10x the pre-ICO price. And then people were jumping in. I was like, well, I'm not really going to buy here because I have no reference for where the price is going to go from here. And then it just skyrocketed to like $10, I think, a token. And then it corrected back down to like 2 or 3. So I'm always preferring to wait for a big move, wait for a big retrace, and then I feel more protected buying in at that kind of low retrace level, like 60-70% off. I'll start accumulating then. Because I know I'm already protected against some of that downside. If you're just jumping in at the highs, you have no idea when it's going to turn around on you. So that's kind of how I use Fibonacci and just general retracement levels.
Yeah.
But yeah, I think the MACD stuff is interesting. I don't do as much day trading anymore, so it's not as useful. But the volume thing is very interesting from like an aggregate level in the market, because it tells you how many participants there are. And you can kind of actually pull that data with CoinMarketCap's API, and you can even graph it if you want. So it's kind of useful data to have. That's just one thing I use to kind of look at the market from a more of a swing trading perspective than day trading. I think it can be quite useful to see kind of where you are in the market. There's one other thing I wanted to ask you about, if you've looked at, which is the Ethereum against Bitcoin pair, because the way I see kind of liquidity growth or credit growth and expansion and contraction, these cycles in the crypto markets, I think a lot of it comes down to Ethereum against Bitcoin in terms of that price. You'll often see when the market's selling off, Bitcoin dominance is rising, which means that even though Bitcoin price in dollars is falling, its percentage of market share in crypto is rising. It's almost like a safe haven currency. People go back to Bitcoin when the market's selling off. And then when the market bottoms and turns around, you see that kind of growth is leveraged on top of Ethereum. So Ethereum starts to outperform Bitcoin again, and that kind of turns around. And that's also a sign of, as a proxy indicator of whether we're in a contraction wave or an expansion wave. Is there any other sort of proxies or indicators you look to help you see where we are in the markets in terms of timing?
Yeah. So that Ethereum Bitcoin thing is something I've been looking at as well. So what you can do, I think you don't even need a paid account at TradingView, but you can go and you can check the ratio of Bitcoin to Ethereum on TradingView. If you just put BTC USD divided by the Ethereum indicator there, and you can see the ratio. And so for me, what I'm looking at is when Ethereum, when the ratio goes below 9 Ethereum for a Bitcoin, then I will probably get into Bitcoin more with some of my Ethereum. And if you notice, the price changes or the moves in Ethereum tend to be much larger up and down compared to Bitcoin. So you'll see days when Bitcoin is up 2%, and then Ethereum is down maybe 8%, but it will fluctuate in the upward direction relatively the same amount of percentage. So it's something that I'm looking for at a given period of time to put back some of my Ethereum into Bitcoin as a long-term store as well.
That's interesting. Yeah, I don't play so much that, but I use it to kind of just look at in terms of the market. If I want to get into the broad market and I'm looking at when's a good time to buy, I'll kind of use Ethereum against Bitcoin as like a proxy to see where the market is. Is it kind of in a contraction wave, or is it, is it growing? So I think right now there's resistance around the 0.09 level with Ethereum against Bitcoin, and it seems to be bouncing off that as resistance. Once we break through that, I think that's going to kind of a confirmation that we're in the next growth, the next move up. We've already had that kind of capitulation move down in the volume spiked, and then I'm waiting for that next move up in terms of confirmation. So that's just how I look at it, but it's interesting. Everyone's got their own kind of indicators and models.
Yeah. So I use that to try to accumulate as much Bitcoin as possible. So it's the fact that I got out of Bitcoin doesn't necessarily mean that I don't believe in Bitcoin, but only longer term view of possibly I could be able to get more Bitcoin in a year or so by trading the ratios.
Yeah, I think that's interesting, because most people coming into cryptos, they're trying to make more US dollars or something, whereas we're trying to make more Bitcoin, because that's for us is the currency now, right? It's like the reserve currency. So
exactly.
that's definitely the way to look at it, I think. Okay, so let's get away from trading for a minute. I think it's quite interesting, but I want to get back to like some of the emerging use cases and utility values we're seeing, because like we mentioned, Bitcoin's had tremendous growth, but from here, where are the gains really going to be? I don't think they're going to be in Bitcoin and Ethereum necessarily in percentage gains compared to some of the newer coins coming out, which, like you said, Veritaseum, Populous, these things have huge potential to disrupt big industries. So, in terms of how you decide to allocate capital, I think a lot of people hold on to Bitcoin and Ethereum because they feel comfortable with it versus something, jumping into something like Veritaseum or newer coins. How do you kind of justify that? Obviously, I think it helps if you understand what you're investing in, so you can decide how much risk you're going to take. But I had this discussion with another investor on a forum. He was saying, Bitcoin's the only true cryptocurrency. Everything else is unproven, it's untested, it's it's garbage. And I was like, well, yeah, okay, you can have some Bitcoin, but you can also have you consider that quality, if you like, versus something potential like Veritaseum or Populous, which is more unproven but has huge potential. So how do you kind of balance that in your mind in terms of how you allocate capital?
Well, I have the core positions, and what I aim to do with those is stay in stuff that I actually believe in. So Bitcoin is one of those, although we just touched on that. Ethereum, again, one of those. Veritaseum, one of those, because I think in the long run, Veritaseum is going to swallow up all of these others that have they're great ideas, but they're limited in scope. So they're too narrow, and Veritaseum is very broad and has a lot of use cases. But in terms of how I split it up, I have those core positions that are probably 30% of my portfolio, and then everything else is split up almost equally. So I'll get something in the financial sector like Veritaseum, which it's not necessarily financial, but it mostly is. And then get something that's more in the technology sector, then something like Proppy that's in the real estate sector, and kind of try to split those up pretty evenly. Only because Veritaseum, they have a lot of work that they've done so far, but could it fail? I assume that, yeah, it's possible it could fail. Could Proppy fail? Absolutely. So I try to split that up just to account for any potential losses or anything like that. But I don't. There's one that I'm looking at that's in the mining industry, right now, and I'll have a video up about that. But it's very, very, very conservative. So you're not going to see the 1,000x type of
Hmm.
growth from there, but it's a pretty, it's, if the project uh, is successful, it's a guaranteed return basically of 3 to 5x, which is uh, very good in traditional sort of investing. So
Very interesting. Is that
yeah.
sort of pre-ICO stage, or where is that coin at the
Yeah,
moment?
it's pre-ICO. I'll have a video up about it, but it's in detail. It's called Sand Coin. So, would you like me to talk about that real quick?
Yeah, sure. Maybe, give
Okay.
your perspective because you obviously come from metals background. I'm invested in physical silver as well, so that's quite interesting. You mentioned that. So how do you kind of look at this coin in that perspective?
Yeah. So what they actually want to do is they have a quarry in Moscow, or not in Moscow, but outside of the city. And what they aim to do is supply the materials for all of the construction that's going on around the city. And one of the things that's very interesting is because of communism, they had all of these flats that were built during communism,
Mm-hmm.
and the laws are such that these have to be rebuilt, taken down and rebuilt because uh, they've basically expired.
Yep.
And so they need the raw materials to supply the construction, and also construction for the roads and infrastructure
Mm.
around there. And this organization plans to supply that. And they've already had some success in the business world. It's an established company,
Mm-hmm.
and they're running an organization. Their problem is that they don't want a large international company to come in and fund them and have a stake in their business. So
Yep.
that's why they're doing a crowd sale. And the thing that I like about it is that they're honest and open about it. But they're additionally going to plan to buy back up to 50% of the tokens in
Mm-hmm.
when the ICO ends. So the ICO ends in October. And so 9 months after that, I believe the buying back will begin. And then in 2019, the tokens should be leased out to other material companies to use in the same manner. So it's interesting. It's very conservative, I would say, um, in terms of compared to the other cryptocurrencies or tokens out there. It's very low risk,
Mm-hmm.
um, because it's an established company. The returns are a lot lower, and they actually know what they're doing when it comes to material management.
Yeah,
So
that's quite an interesting way to do it. I guess raise funding without giving up equity or stake in your business. I think
yeah,
that's going to be very common. We're going to see companies issuing their own sort of coins or chains to do that.
yeah,
So that's yeah, that's you've got to be quite patient because your time frame there is you're saying it's going to take 9 maybe 12 months for them to start actually generating some value with that coin. So things obviously move really fast in the space. With Veritaseum, for example, it's
yeah,
gone up maybe 150x in 2 months. So I think that depending on your knowledge of the industry, like finance or real estate or construction, you may lean towards one or the other, in terms of your preference, what you understand.
yeah,
But for me, I don't have massive understanding in construction, so I need to look into that more and see if it makes sense. But it's nice that they have real proven business execution, because it gives you confidence that yeah, they can pull it off. Whereas so
yeah,
much stuff is just like fluff and hype, right, in a white paper with nothing else behind it. So
yeah,
you've got to really weigh the risk and return. People think, oh, that might be boring because there's not much upside, but you jump to something else that doesn't have any real proven execution ability, and you never know what's going to happen. So yeah, that's always the trade-off.
yep, yep, definitely. So every time that you have a high amount of returns, you have a relatively equal amount of risk, I would say. So it's always a good fundamental rule to think about.
What I like about Veritaseum, I think you might know a little bit more than me because you're saying it's got all those use cases. What I was looking at, when I look at Reggie, he's not so focused on building up all this buzz and hype around the ICO, trying to raise lots of money, like a company like Tezos, for example, just like trying to get as much money as possible and then cash out like a banker bonus kind of
Yep,
mentality. You see that with a lot of ICOs. Developers just launching one coin after another and just moving on to different projects, and just it feels like a bit scamming because they're not focusing on the project they started. They go start another one. With Reg, he doesn't care about getting it listed on an exchange because he's not really trying to get the speculators in. He's obviously got a completely different business model. He's not even got a white paper out. So I prefer the ICOs that really fly under the radar and don't put so much buzz and hype into the marketing, because for me, that's an indicator that they are looking for long-term value creation. Tokens that are locked up for 1 year or more. When the founders are doing that, it gives you a lot more confidence in the projects. I think Populous did that. Some other ICOs that I'm looking at, that just gives you more confidence that they're really in it for the long term. Is there any sort of red flags that you see when you look at ICOs in terms of the ones to avoid and which ones are just hype and fluff?
Yeah, anyone that has a very big PR team.
It scares you. Yeah, yeah.
Yeah,
Yeah.
because especially if they're a startup, because that adds overhead to their organizational cost, and they don't actually have a lot of money coming in anyway at that time. So it's best if they're managing their money wisely and they're very conservative. So that's another thing. If their website looks simple, it's not necessarily a bad thing. It just means that they're actually focused on real work and getting something done instead of looking good. And I think that the hype stuff is stuff that I mostly see through, and I don't really get excited by it at all. So it's mostly the PR side of things. I don't really like dealing with a lot of PR people because they want to get people excited, and they're good at it. So that's their job. And it kind of manipulates people's emotions to feel good about something. So it's mainly the PR. I think that's the biggest red flag to look for.
Yeah. So it's really the opposite, because most people will get excited by these big projects. They hear a lot about, everyone's running into it, and they're like, yeah, I want some. But that has a downside as well in terms of the distribution of the tokens, because sometimes, like Populous, for example, when they sold at pre-ICO, the token holders, there was only a few hundred, so it was like very, very concentrated. These people were holding it for long-term value. Whereas when you have tons and tons of people, contributing, there's tons of supply, which these are not committed people long-term. They're just jumping into this thing, so you get a massive pump, massive dump, and then you can get stuck holding these junk tokens where there's no real world value or product coming to market anytime soon. So that's what I like to try and see, something that's below the radar. Team has proven execution ability, and it's just not massive buzz and hype around it. So the people holding the token are holding it for the long term.
Yep. I'd like to add to that the social and community aspect of the tokens, I feel, is important. So it's important to distinguish between PR and hype and people trying to build a community of support around them. So if they're actually trying to get people involved in their project and working with them, I think that's good, because it allows them to have a support base for the future. But the PR and hype side, it's kind of a fine line between those two,
Sure.
and you really have to
Well,
kind of weigh those.
I'll give you one example of the other side, which is I'm seeing Facebook ads now for token sales, and to me, like, if someone's spending my capital on Facebook ads, there's like a massive red flag, and not putting it in the product. So that's definitely one sign. You can see that's
Definitely.
that's not something I would invest
ridiculous.
in.
Yeah, for sure.
Okay, so we talked about, I think, quite a few things. We're almost coming up on the hour mark, so I'm conscious of your time. Maybe you can just walk us through where you see the market going in the next 3-4 years in terms of the potential. I think people feel like if they're not in Bitcoin already, they see it's like $3,000. They're like, oh, I missed out on Bitcoin. I think we're still very, very early stages here in this sort of cycle. In terms of how disruptive blockchains are going to be in how we do business, I feel like very similar to the internet, even more disruptive because it affects finance in ways the internet didn't. So maybe just give us your thoughts on where the market's going to be in 3-4 years, the potential sort of future, and how you're playing it.
Sure. I think the core and established tokens or coins are going to go way, way, way up, especially into late 2018, early 2019. You're going to see huge moves in Bitcoin. And I say Bitcoin because it's something that a lot of people have already heard about. They don't know much about, but it's just something that has been mentioned. It's in mainstream media from time to time. So people have heard this, and it's something that they are going to look at first. And after that, after 2018, 2019, I definitely see a lot of the other tokens that have real functional value for businesses to go even higher than Bitcoin, like Veritaseum. I actually see Veritaseum going higher than Bitcoin in terms of market cap.
Wow.
way higher in 2018, way higher for sure. That's the way I see it. It's just there are too many deals going on with Veritasium for it not to explode in price. It's going to be shocking, and people today that are saying that Veritasium is a scam, they're going to look back, and I think they're going to be really disappointed. So
Maybe I should
yeah,
hold on to the rest of my Veritasium then, because it's had massive gains. So obviously I sold some of that and flipped that into other ICOs, which I think will do very well. But obviously having
yeah,
a core position, I think, for the future is not a bad idea. So
yeah.
you're saying you think it will take over the market cap in terms of outperforming Bitcoin.
Yeah, but here's the thing on that. So when people have replied back to me when I make that kind of comment, they say, you realize that it would mean it would be 50% of the cryptocurrency market or greater. And what they fail to realize is that all of the other cryptocurrencies, Bitcoin, Litecoin, they're also going to grow. So
Mhm.
that doesn't necessarily hold true. It will be a big portion of the cryptocurrency market, but I don't think it will be more than 50%.
That's interesting. I think that
Yeah.
Veritasium is well positioned to take the institutional money into crypto world, and that's the real liquidity we need to see the next sort of wave of capital growth. So I think Veritasium is definitely riding that wave. I think Bitcoin and the other established coins will do well, especially at the retail level, because they're like gateway currencies. You have to buy Bitcoin before you buy the other coins, and they're the ones you can get on the exchanges like Coinbase. So for the new people getting into cryptos, they're obviously going to see Bitcoin and Ethereum first, as the ones you can actually exchange with fiat currencies, and then from there they'll move into other currencies. So I think Bitcoin and Ethereum will do well as sort of gateway currencies. But institutional money coming in will flow into coins like Veritasium, because that's just the use case for it. So I think that has massive potential. I see, Bitcoin dominance is around 50% right now. A couple of years ago it was 90%. So as Bitcoin dominance has fallen, obviously the other coins are basically outperforming Bitcoin. Do you see that trend continuing? Is that something you think is going to play out, where Bitcoin maybe falls to maybe 20%, 10% eventually of the whole crypto space, market cap wise?
Yes, I do see that happening, definitely, because you just have, again, what you mentioned, the institutional money coming in, and that's just going to be, it's going to be trillions and trillions of dollars. It's the world economy transitioning into this system, basically. So imagine what that's going to do for all of the prices, and the tokens that are very successful for their relative sectors are going to be, huge leaders for those, obviously. So yeah, yeah, I would agree with that.
And then, people say cryptocurrencies are in a bubble right now. So it's funny, because if you take a step back, you look at where there's bubbles everywhere, right? We live in a bubble world. So
Yeah.
cryptocurrencies right now are maybe $100 billion, around that level of market cap. You look at property, like I just said, 200 trillion, government debt and bonds, $100 trillion market. Global equities, stock markets are $50 trillion. So huge bubbles, like almost $350 trillion in these fiat assets and derivatives. So maybe, in terms of breaking down why you think cryptocurrency are going to do so well, is it a failure in those systems that's driving capital out into better models of money, or how do you see that kind of macro trends affecting cryptos?
So it is definitely a combination of factors. One of them is the failure of the old system. I call it the old system because it's really a system that hasn't evolved in hundreds of years.
Mm-hmm.
And we've just used computers to kind of assist that old system along. We haven't really innovated. So now that we have real innovation, that failure is going to have to go somewhere. So the weakening of these systems have people looking somewhere else for alternative or better solutions. So, for example, you have a business model that works, but only given a specific cost structure. And because cryptocurrencies and tokens allow for low barrier to entry for people who don't have a lot of money, this allows for a lot of business potential. So people who would normally go through some sort of financial institution or their business organization can go somewhere else for very low cost and get the same or better services. So the other thing is automation as a trend. So the tokenization of services means that people can automate a lot of stuff that a traditional organization would have to do with administrative processes, paperwork, and so on. So those combined with the failure of the system, that I believe it's not going to be like a one day sort of thing. It's
Mm-hmm.
going to be a process. So it's all a transition that's going to take some time, and it's many factors playing into that.
Yeah, I think we're in the very early stages, because crypto market cap is only 100 billion compared to $350 trillion. So in that
Yep,
perspective, it doesn't seem like it's in a bubble yet to me.
not at all.
So yeah, so it's just super early, super exciting, so much potential. Any sort of resources or visionary leaders you look to in terms of people who have a good read on the markets that you follow and maybe I should interview?
Oh, I really don't watch a lot of other cryptocurrency guys on YouTube. I follow Cliff High. He's mainly the main guy. Other than that, I go to CoinDesk and I just read various cryptocurrency news that's out there. And then, of course, I try to stay ahead of the curve on the technologies. The technologies drive the utility value of currencies or tokens. So that's where I see it. If you have more utility in a token, you probably have more value in it as well as to what can it offer the user. So that's what I look for. I don't really watch a lot of people on YouTube. So
Okay. No, it's a good point. I
sorry
think
about that.
your edge is definitely in the technical understanding. That's why I watch a lot of your stuff because I'm not super technical.
Yeah,
If that's your edge and you can kind of distill that and break that down, that's very useful
yeah,
information. So that's what I'm trying to find, people who can like take
okay.
really complicated concepts and then simplify that. So obviously Cliff does that with linguistics, and what he does is really interesting. I think what you're doing, it adds a really good edge to anyone who's really interested to learn about the future and where this is going from a technical perspective. To give you an edge and how to read the markets. So I appreciate the work you do. I'll wrap it up in a minute. I had one more point I forgot I wanted to mention in terms of how governments are going to respond to this, because obviously it's a big threat to the old system, the way of doing business. Governments rely on the current system. They have everything invested in that. So I see this kind of playing out two ways. Obviously the current financial system is set up by America primarily in the West, and they've run that system since the end of World War II. So they're really invested in keeping that going. Whereas maybe the East and Asia is that holds them back because they don't want to be using the dollar anymore. They see the potential of blockchain. They're adopting it much faster. You see a lot of trading volumes coming from South Korea, Japan, China. These countries are really embracing it, and the governments may be sort of tacitly endorsing it more than the West. Do you see that kind of playing out in terms of where the growth is going? Obviously, China also has the manufacturing now in terms of real world economic growth. They have the manufacturing. Asia has the demographic advantage moving forward. Maybe you can just talk about how you see those kind of trends playing out, and is it going to be a conflict, or is it going to be just a natural transition of capital moving over to the East, and how does that all play out with cryptos?
Okay, yeah. So
Big question, I know. Sorry.
no, it's okay. It's a great question. The government officials are not that smart or not that bright. They don't really understand cryptocurrencies, and they don't understand that their attempt to regulate the industry or the sector, whatever you want to call it, is going to just cause them even greater failure because it's the innovation that's coming out of it. So any sort of regulation is not going to actually be very successful at all, and it's just going to push money towards other countries like Asia or continents like Africa. Asia and Africa are continents, but like those two continents, because there's a lot of underdeveloped nations out there that don't really have a lot of money to put forth for new infrastructure, and the innovation that cryptocurrencies and tokens bring allow for the use of some of the pre-existing infrastructure while revolutionizing the way people conduct themselves in the economy. So I definitely see a lot of capital going towards the East, specifically because in Europe as well, you have countries that are giving small businesses that want to get people excited about Bitcoin. So there are people I know who have cafes who only accept Bitcoin or Litecoin,
Mm-hmm.
and the governments want to come in and try to shut them down by doing monthly audits on their documentation to see if they're laundering money. And then there are production companies who accept Bitcoin, and according to the EU tax law, if they export stuff from the EU, then they don't have to pay VAT. Well, they will do monthly audits, and the government will come in and say, hey, no, because you didn't fill out this form correctly, you're in violation, and therefore you have to pay VAT anyway. And so all of this stuff, it's just going to drive the innovation elsewhere, because other people in the world have those same ideas, those same concepts, and where there's less regulation and less government headache, those people are going to flourish. And so definitely Asia, Africa, we've already seen that with Russia getting into Ethereum and having those open discussions. And I think the countries and localities that are more open to the debate and discussion of these technologies are going to be better off anyway, because it's the understanding that's important. And there's a lot of propaganda coming out of the United States. So
yeah, I think that, you know, governments don't appreciate how global capital is now. So you're saying like there's an entrepreneur or a business person who's got an idea, he's looking where to execute. You're not going to go to Europe, you're not going to go to US, because there's too much overhead, too much bureaucracy, too much waste. You know, you'd rather go to Asia, where it's just, you know, it's more open, business friendly environment. You can get stuff done without all those barriers. So I think they are going to chase a lot of capital out. You're seeing that already with the ICOs, where they don't want to let US investors in because of the SEC, because of, you know, all these regulations. So I think that's just going to become their disadvantage. I don't know when they're going to wake up and realize we're losing lots of innovation, we're losing all the money, and reverse those policies. Do you think that will ever happen, or they'll just go down, you know, fighting it all the way?
I think it will happen probably 10 years down the line, but by that time, by that time, a lot of the people anyway in the US got into this, and the government's just going to give up, and they're going to have to one day change their stance, because the end goal of the government is to seek dominance and control anyway. So if they want to maintain that, they're going to have to change their view, because they're going to have to compete with other governments who allowed this, like Switzerland or China, who's more open to discussing Bitcoin, things like that. So they're going to lose, but they're not going to come out and say that, hey, I'm sorry guys, we screwed up. They're never going to do that.
Yeah, absolutely. I think, you know, as someone because I've been traveling around the world for a while, so I've seen how advantageous it can be to do business outside your home country. Inside your country, your government kind of treats you like a slave in a lot of ways. Whereas, you know, if you're an overseas expat that's trying to attract you, they want to bring your capital in. So they're much more inviting and respecting of foreigners in a sense. And there's always that competition for capital. So I think you can use that to your advantage if you understand how the game works, and obviously position yourself to take advantage of where the growth is going to be. I don't think it's going to be in Europe and US so much as it is going to be in Asia, and like you said, Africa and these, you know, developing countries. So is there any sort of other insights you want to share in terms of how you, you know, your model, your perspective of life, and how it affects your investments? And yeah, you're in Slovakia, so maybe tell us why you're there, where you see the world going.
Yeah, I'm here basically because I had a wife bring me here.
It's always a good reason.
But you know, when it comes to these cryptocurrencies, I would say the best thing that you can do is stay curious and keep your emotions out of it. If you are putting that the amount of money in that causes you not to sleep at night, that's a good sign that you've got too much into it, and that you should probably be looking elsewhere. And just relax. And the cryptocurrency stuff is in inevitability that it's going to be successful, because the technology already came out. So even if some of these tokens or coins fail, the technology is going to persist. So that's how I view it. It's the future, and it's hard to predict which specific token is going to do well, but the technology will absolutely be successful, and it's very exciting. That's how I see it.
Very cool. Okay, thanks a lot, Mike, for your time. Really appreciate you sharing your thoughts. We'll put a link, obviously, to your channel. People can get in touch and follow what you're doing. And yeah, I'd love to have you join the group and check it out. Maybe you can give some insights to our members and stuff. I'm sure it'd be really useful. So yeah, thanks for your time. If you want to stay on the line, I'm just going to wrap this up, and then we can have a quick chat. So thanks, guys, for coming on, listening to this one. Let me know if you have any questions. Put it in the comments below. We'll have Mike in. He can come and answer any questions as well. So yeah, hope you enjoyed this, and we'll be back soon.
All right. Thanks, guys. Bye.